All right, welcome everyone. Welcome to the call today. We've got some exciting stuff for you guys. We're going to be going over business funding and how to fund your real estate deals using lines of credit, or really any business that you want to fund using lines of credit. And we've got some experts on the call today, some guest speakers that I am excited to introduce you guys to. So we're going to hit that soon. So a couple of announcements that I want to make real quick while we're kind of setting up here. So first off, our Mitch and Maeli live call, this call that happens Wednesdays at 7, every Wednesday, 7 p.m. Mountain Time, is now streamed live. This is our second occasion of streaming this live on YouTube. So if you don't want to jump on the Zoom call, if you don't want to interact, you can be on YouTube. If you want to invite people, they can come in on YouTube. And likewise, those of you who are joining us on YouTube, you are welcome to join us on the Zoom call. If you want to interact, if you want to ask some questions, you're welcome to use the YouTube comments. We'll be pulling questions from there. Or you can jump on the Zoom call by simply going to mitchandmaelylive.com and hop on the call and participate with us. So all I ask is that if you're on the Zoom call, please be respectful of the others on the call. But feel free to come on and ask your questions. And then I know we've gotten a lot of our regulars have been asking, where can I find the archive of past calls? This is it. So the YouTube channel, if you go to the Flipping with Mitch and Maeli YouTube channel, you can click on the live tab, and it will now automatically and immediately create recordings of these calls that you can access and watch live. So pretty awesome stuff. Another announcement, if you are in the Utah area, we have some live meetings coming up. We have real estate. First off, we have real estate investor community meetings all around the country. So if you want to plug into communities of like-minded individuals anywhere in the country, reach out to me. I'm happy to get you those dates and times and addresses of when they are meeting. But specifically, if you're in Utah, we do live events every Tuesday, every Thursday, in fact, twice on Thursday. So every Tuesday at 1 p.m. in Murray, Utah. Let me correct that. Twice on Tuesdays, 1 p.m. and 7 p.m. in Murray for the 1 p.m., Sandy for the 7 p.m. And then again on Thursdays, it's always different topics. So you're never, if you wanted to attend all three every week, it's always going to be something different. Thursdays at 7 p.m. in Sandy. And then we have a special guest coming into town. It's more of a regional thing for our real estate investor community. Mark Kohler, who teaches our tax and legal class, will be coming to Idaho Falls. That's something you're not going to want to miss. It's going to be a 2-day event, and Mark is absolutely brilliant. If you haven't seen his YouTube channel, you need to go check it out. He has some incredible stuff that he teaches. So that is going to be, so Mark Kohler is coming on February 17th and 18th in Idaho Falls. We're probably going to be renting a big van or SUV and taking a group of people up. So if you're in the Utah area or you want to come in for that might be something that if you guys, are serious about needing some tax and legal advice, that might be something you want to attend. So that is going to be February 17th and 18th in Idaho Falls, Idaho. Guys, we've got some incredible guests for you today. They're going to be sharing some awesome things, and I'm going to introduce them in a few minutes. But wanted to let you know that next week we are going to be doing Deal or No Deal. So we're going to be analyzing deals, playing our Deal or No Deal game. If you're familiar with that, it's a super fun game that you're definitely going to want to be a part of. And the goal of the game is actually to make you better at analyzing real life deals. So you're going to want to be there. And then we have a guest speaker coming in on the 8th, 2 weeks from now. Carrie Mann is going to be talking to us about understanding mortgages, something that's important for a real estate investor. Right now, I think the best acquisition strategy that we can use is seller financed acquisitions. And a lot of times those have underlying mortgages. We need to understand how mortgages work if we're going to be able to play that game. So you're going to want to be there, mark it on the calendar, every Wednesday, 7 p.m. Okay, so, man, look at you guys. We're stacking up today. I love it. David Cokerhan's just joined the call. Welcome, David. Rosa's on. Welcome, Rosa. Quinn, long time no see, my buddy. How are you? It's good to see you, my man. Thanks for being here today. Got a few old faithful patrons here. Michael Walker's on the call. We've got Lester on the call. Ken's here. Denise Cook is here. Hi, Denise. Welcome.
Thank you.
Absolutely. Charlotte's on the call. Welcome, Charlotte. Bruce is on the call. Man, it's a stacked call today. I'm excited, and what a better topic to be talking about than business funding. And we have some experts here today who absolutely crush in this arena. So I'm excited to introduce them to you. Today we've got Mike Irizarry and we've got Oscar Ciro, who are going to be talking to us about how to fund our businesses, whether that be your real estate investing business and buying properties or any other business that you have through lines of credit. And these guys are experts. I'm going to let them tell a little bit about their story, but these guys are masters of credit repair. They're masters of business funding and masters of business credit. So let's bring them out. Michael, Oscar, how are you, my friends?
How's it going,
I
guys?
got Michael up. I
Pleasure
need
to
to
be
bring
here
Oscar
today.
in here. Where's Oscar at?
How's it going?
There he is. I'm going to add you to the spotlight, my friend. There we are. All righty. What's new, guys? Guys, I'd love for you to tell us a little bit about your background, how you got into this thing, and the journey that you've been on since. So, the spotlight is yours. Feel free to take it away.
Yeah. So it's 2020, mid-pandemic. I used to work for Congress as a staffer, and I lost my job. Was having a hard time finding a job. So that's when Mike and myself started our first business together. Um, we used to do websites. Then we graduated to e-commerce. In servicing our e-commerce clients, we noticed that they needed funding so their stores could perform and they could make passive income, so they could have a bigger budget for buying inventory for the items we sold for them on Amazon. Um, we used to do credit repair and outsource that to other companies. Unfortunately, those companies didn't always do the best work. And to be fundable, you need to make sure that your personal credit is in good health. So we actually spent thousands of dollars doing masterminds, reading audiobooks, and doing different courses to become masters of credit. Once we kind of got credit locked down, we started doing the same thing, focusing on funding to grow our business and get ourselves access to funding. And now we're at a place where we can confidently say, if we fix someone's credit, we can get them access to anywhere from 20 to 200K at 0% interest to help them either grow their business, put towards and liquidate towards down payments to purchasing real estate. There's so many different applications that you can do when you have 0% financing for 12, 19 months, in some cases 21 months.
Yeah.
Mike, I'll let you take it away there.
Yeah. Pleasure to meet everybody. My name is Mike Irizarry. I'm the Chief Financial Officer for Ecom Boost. It actually started when I was doing sales with insurance. I used to do insurance sales, health insurance, life insurance, annuities. That's when I started moving into the bank realm. I got my Series 6 and Series 7 investments license, and I was working at Chase as a private client investor. I didn't really handle anyone's capital. It was just like, hand them to the portfolio manager and then they did their part. I didn't really feel like I was impacting someone's life to the extent where I wanted to. And, meeting with Oscar, understanding what it is that we do, I was already in the means of learning how to, fix credit, reading the Fair Credit Reporting Act, getting, like, pretty much understanding the business. And, meeting with Oscar and then us coming into the e-commerce space, seeing the necessity that's needed when building a business and having good credit in general, like overall. Um, and like it can be from starting a business to even like someone who's a family man that just needs, more access to money. We've noticed we affect people's lives to a greater extent fixing credit, and that's something that I'm fairly prideful for. Like, I can affect
As you
someone's
should
life
be.
for the better, and they can wake up in the morning and be happy about a 750 credit score. They can be happy about having the availability to grow their business, having the availability to have money to inject into their wants and their needs when it comes to like if you want to do a fix and flip, a fast fix and flip, giving availability for that, having a plan set in place, which most business owners you know don't have. That a lot of them are shooting from the hip when it comes to like applications, SBA loans, business lines of credit, 0% interest credit card stacking. A lot of those things are very important to understand, and when trying to grow anything.
Yep. funding, I like to compare it to dating. Basically, most people, without realizing it, they have good credit. They're probably like at a 5 or 6 on the 1 to 10 scale. If they don't have good credit, they're a 2. So, they're not going to go out there and have a successful date when it comes to lending.
Yeah.
So we go in, we look at someone's credit profile, we make them, we call a checklist, we call it a checklist. So we make them fundable by making sure they're hitting certain things on their checklist. And that's not just the credit score. That's letting them know and educating them what the real credit scores they should be looking at. Because, for example, your credit karma, that's not your actual credit score. When you're actually looking about credit, you're going to get more into your FICO score, your Experian. That's a lot better tool, a much better tool to check your FICO score. But there's different FICO scores for different areas. So, like, there's a different FICO score for auto lending. There's a different FICO score for mortgages. That's a 2.5 and a 4. And Mike's an expert on all of that. Like, I love Mike. What he does is, like, when he's bored or when he's, instead of like watching Netflix, he actually studies lending and credit. So I love him for that. He's always on the cutting edge when it comes to the information that we can utilize to prepare credit, and also the strategies we can implement to get people access to funds to get them to the point that they're a 10 when they walk inside a bank, and that bank manager is like throbbing at the mouth, making sure they build a relationship and giving them a credit card for $20,000 with 0% interest for 12 months.
Yep.
That's
So
beautiful.
That's essentially what we do in a nutshell.
I love it. I love it. So, we talked a little bit. I mean, you guys kind of touched on how important personal credit is in getting business credit. Let's talk about maybe and I think this is a good starting place. Let's talk about some of the things that, as real estate investors, as business owners, as entrepreneurs, that we can start doing to prepare ourselves for this process. So if that's personal credit, focusing on our personal scores, what are the things that we can start doing to prepare ourselves to go out and get these huge lines of credit that are going to help us do real estate?
Yeah, 100%. I mean, realistically, guys, we got to start looking at like where everything begins, right? And I know that may sound crazy, but you got to think about it starts with your LLC incorporation, making sure you have the proper documentation to set up your LLC. So that would be like making sure you have a business phone number, making sure you have a business email, making sure you have something that's reputable for you to come to the lenders and them trusting in you, right? That's for the business start. The other side is you need to make sure that your personal credit is sitting above a 720 all the time. And that's making sure you make your payments, making sure you're living within your means when it comes to like monies that are coming in monthly and what needs to be paid on a month basis as well. Like we all have to be responsible on that. You know what I mean? Then making sure all of your personal information on your personal credit report all match as well. So what does that mean? We have a VID, a validated identification, right? So what does that do is you got to make sure you don't have any also known as names. You don't want to have the lender reading at your credit report and saying you're Bob, Billy, Joe, and Nelson. You understand what I'm saying? You can't be known as other names because those are red flags in the eyes of lenders. So that's something your public record information needs to be lining up across all boards, right? That's your place of living, your employment, your birthday. You got to make sure everything that that is on there is reputable to you, because we want to make sure. So like these types of things will make the difference between getting a $5,000 card and a $15,000 card. So you understand the importance of like you are who you say you are for the purpose of getting better lending. So that coupled with your credit score is the base of the start.
And going back to what Mike was saying, with incorporation, if you're in a high-risk industry, when you're incorporating, you might want to reconsider your name and what you're incorporating as.
Yeah.
So, like, for example, somebody might have like Mike's Truck or Mike's Towing. That's not going to be as attractive, and we only know the guidelines the bank set forth when it comes to being fundable. But with that said, they're going to be more attracted to Mike's Consulting or Mike's
marketing.
Yeah, Mike's Logistics.
So anything. So what Oscar is touching on is like anything that's not pertaining to a high risk industry. So like real estate agents, investors out there, listen Do not put real estate or investor in your name, please.
Yeah.
It's
So you're
very hard.
forcing like green card loan. They're not even gonna look at.
Yeah, like it's very hard when they ask you what you do and you put that for you to get access to lending, and that's just the bottom line of it. So there are industries that we say, you're not lying, guys. You understand what I'm saying? Saying that, oh, we do consulting or this that, you're not lying about
Well,
what you're doing. It's just
one
an example.
example that I can share if you don't mind. So Maeli, actually, this was before we met you guys, but Maeli went through another credit company to help her get some lines of credit, and that was some advice that we got as we were kind of studying online. Like,
Yep.
look, real estate investing, like as safe as educated investors can be. The banks don't look at it like that, right? And it's all perception. We want to. It's bank perception. It's not reality. It's the perception that we want to make sure that we're hitting. So she, part of what she does is design and staging. So she made a staging company, and that's what she got lines of credit under, was design and staging, which is not false. Staging is absolutely something we do.
Yeah.
It's not necessarily the primary thing we do, or maybe the primary thing that we're going to use the lines of credit for, but it is something that we do, and it is something that we are going to use some of that money for. So
Exactly. And then
Absolutely.
for a good example, like for instance, you can have your real estate investment company and then start another LLC which you're consulting your primary business with. You get what I'm saying? So like
yep.
it's all about the narrative, guys. Like understanding what you can and can't say, what like where the money's going, how the money's moving. Like getting lines of credit for one business to invest in another is not against the law. You can do that.
Mm-hmm.
So, like, that's just something to think about, guys, when thinking about reincorporation or something like that. Your name and then the industry and then the purpose of these funds and how we're going to articulate that to the banks.
So getting our personal credit in order, making sure that our social has our exact name on it, making sure that we've made our payments on time, that we have any collections taken care of, kind of all the things you mentioned. At what point should we start thinking about, as an individual, should we start thinking about business credit? I mean, if I'm coming in off the street and I've got a 520 score, and I start doing those things and that score starts to rise, at what point am I thinking, okay, now it's time to go out and start looking for some business credit to start growing my business beyond what it is?
Realistically, guys, when you start a business, right? If you're at a point where you have a good credit score and you want to get into something else, that thought of I want to start something is when you should start your LLC, because we're no longer at the point where you're going to do applications on your personal side and start affecting your personal credit. So like we don't, even if you had 100,000 in personal credit cards, and we're just saying we would rather you create an LLC and us go to those same banks that you've had that $100,000 with, right? And then speak to them on how we can get business credit cards, the best relationships with those banks moving forward. Because your thousand on your personal side is for the rainy days. If something happens, if COVID hits again, if you break and you can't work for 3 to 6 months, boom, you have 100 grand, 50,000 to 100 grand. This helps those to be paid for 3 to 6 months. We all know about the importance of having a savings account, but your debt could be your savings account as well. You just got to think about it like that. Um, then you have on the other side of it, now you have business lines of credit that don't go to your credit report. So now you can that 10%, that 30% margin that you can't pass on a personal credit line, you can go to 50, you can go to 60, you can go to 70% utilization and still have a 720 credit score where you still have availability on your personal side. You see how that works? Like you want to always take the liability out of your name. Just pull it out of there. The worst thing that can happen, guys, you're gonna accrue a couple of hard inquiries on your personal credit, and your score is probably gonna drop anywhere from 10 to 20 points. But it's at what risk would you rather have a card where you have 20,000 person and utilize that, and now you're dropping 50 to 100 points because of utilization, or would you rather keep your 720 and utilize the business line of credit? You see what I'm saying? So like, it's all about the narrative and what you're going to use these funds for. Investing into the right things, having a plan. If you're going to accrue that much money, you got to have a plan to, make money with that money.
Absolutely.
Absolutely.
Just to bring back to, sorry about that. bring
No,
it
go
back
ahead.
to the beginning. If you are at the start of your entrepreneurship journey or you are thinking of starting a business, then the most important thing is your personal credit. You need to make sure that's at least in the 700s and you have a strong credit profile. That entails having different things on there, more than 5 cards, having a mortgage if you
Yep.
have a mortgage, having a lease or a car loan if you don't have one of those. Because all these things build your integrity and build a stronger number because the bank will actually look at a 710 with all these things better than it would at a 780 without any of these things when it
Yeah.
comes to terms of what they're going to give you
Yep.
and,
And
and access to funding.
yeah.
Also, in the beginning, for the first 2 years, you're going to be personally guaranteeing everything. It's not going to be going under your business. So even if you are getting lines of credit on the business side, you need to make sure that your personal credit is
Immaculate.
exactly.
Yep.
Yeah. And that personal guarantee, that's a scary thing. Like I know a lot of business owners, as we start to get into this entrepreneurial mindset, we seek out education, and we hear a lot of voices out there saying, hey, look, don't have anything in your personal name. And then all of a sudden we're hit, when and we want to go out and we want to get business credit, but now we're hit with, for first timers, we're hit with these personal guarantees.
Yep.
That can kind of choke you up a little bit. I know the first time I went out and got a hard money loan. He's like, you got to personally guarantee it. I'm like, ooh, I don't know. Think twice, right? Um, but you know what? That's okay. You got to build that. You got to build that credibility. And now, some things I still have to personally guarantee, but there's a lot of scenarios out there where I don't anymore. And that's after 10 years of working the system, right? That's after 10 years of being in business and having a track record. And this stuff, your business is going to grow. And if you're not there, if you're not where you want to be yet, just keep working because you'll get to where you want to be. So,
I
you
mean,
know,
it's just for a great example, like you said, be patient. Your business is going to grow. Like we had a client come to us with, what was it, like 71,000 in credit cards, right? And he was like, what do I do to get higher lines? It's like, well, we applied certain strategies to him. His credit score boosted. His credit score went up to a 812 based off the strategies that we told him. And now the first application we did for him, just based off the strategy, $39,000, 0% interest. So, but that's what I'm saying. It can, it's all about the strategy. I'm glad
love it.
he already had certain things in place, $71,000 set in place, and I was just like, okay, bet, because now you're in a different position. And then we also have strategies to help increase your small business financial exchange, your Experian, and your Equifax business credit score based off of certain channeling strategies as well, utilizing the credit cards that we can age your proof for. So that some of these things can be expedited, guys, if we implement the right strategy. You know what I mean? If you're
Right.
patient for 3 to 6 months, you can get a lot of money if you're patient. But if you're like, oh, I got approved for 20,000, let me just do whatever, and then you're like, okay, well then I can't get any more lines right now. It's you got to follow the strategy.
Right.
Absolutely.
And
Being
man,
patient. Oh, it's my bad.
oh, I was just gonna say, 30, 40,000 bucks. I mean, the people on this call understand what can be done with that. I mean, that's a new Airbnb. That's a new rental property. I mean, if using some of our seller finance strategies, coming in with a $40,000 down payment, we now have an asset that's going to cash flow several $100s a month, and not only cover that the debt costs, but also put some money in our pocket. So that's a very powerful thing.
Yep.
Absolutely.
And
I'm glad you touched on that, Mitch, because that's exactly what I was going to talk about. For those of you that are into your entrepreneurship journey or already business owners and have already established a proof of concept, you've done your first deals, you have cash flow, you have money coming in. That is gold. Get out of the habit and the old mindset of utilizing your cash. You want to stack that up and leverage credit.
yep.
So your next deal, you're going to do that with credit and with debt because the more cash you have, the better. So when you're applying for a new card, you're going to put the 10 or 20K that you would have used for this project into that bank account. You're going to ask them for a line of credit to do the said business. And then they're going to give you a line of credit because you have 20K sitting in there. They've seen that you've made payments and they're going to give you a card for 20, 40K at 0% interest and use that for your next deal. You don't use your own money for your
Yeah.
next deals.
So
OPM is the biggest hack and secret to building wealth that you can absolutely do.
yeah,
So
and
true.
then you got to think about it, guys. Imagine having like close to 50 to 100,000 on 0% interest, where now saving in interest if you're 0% interest for the year. For 12 months, 21 months, like
Yeah.
you can really get a lot done.
Well, and combine that with strategies like velocity banking, right? Where we can take the revenue that we have, and because they're lines of credit, not loans, we can take the revenue that we're getting from this asset and dump the entire gross revenue into the line of credit. The acceleration and debt pay down that we get, taking advantage of that 0%. If we can pay that off in a year, just simply from the revenue that we're getting from the property, now we can go out and buy another property, and that one $40,000 line of credit becomes represents a new property every single year, right? And a new property, as we add properties to our portfolio, that increases our cash flow, which means we're paying the thing off even faster. So the first cycle is a year, the second cycle is 9 months, the third cycle is 6 months, the fourth cycle is 3 months, and before you know it, you're buying multiple properties a month, using other people's money, using the bank's money, using the previous owner's mortgage, and using multiple exit strategies like long-term rentals, seller finance sales, Airbnb. I mean, you name it.
100%.
It's a fantastic way to use this.
The greatest part about that, guys, he's not even including the fact that as you're paying off these lines, they're gonna want to give you more money. You get what I'm saying? So like, that's the greatest part
Yeah.
about what it is that you're doing is you're going to get access to more money just by doing the right things and having the correct strategy and utilizing your funds the correct way. You don't ever want to use your money. Use your money as leverage. That's your leverage.
Yeah.
When getting debt.
Man, I know. I mean, none of us obviously are attorneys or accountants. We're not. We can't give personal advice, but just objectively talking about this,
Yeah.
I think the smartest thing you can do with a line of credit. Too many people go out and buy liabilities, right? They get a $10,000 credit card, and the first stop they make, if they're a guy, is Best Buy, and they buy a TV and they buy surround sound system, and just fill up the living room with entertainment, or if they're a gal, maybe they go to Sephora or a clothing store, and I get it. Like those are that's why we work hard. That's what we want to do. But if you can fight that temptation, and if you can use these lines of credit to go out and buy assets that can increase your cash flow and allow you to increase your lifestyle, as you increase your cash flow through assets, increase the lifestyle, go do the things you want. But when you get access to capital like this, man, my personal opinion, you're a fool if you're not out buying assets with it.
Yeah.
If you're not out doing things and activities and buying things that are just going to make you more money on a monthly basis.
Yep. I mean, we've had clients that have done that, right? We've gotten somebody access to 249,000, and he had a plan for his money. There was a 70% so the capital that was raised, he was supposed to utilize 70% of that capital for earn function, so he can get 12.5% back on his money, right? So that would have been over the span of the year and a half, 2 years, right?
Yep.
And he decided, without letting us know, to go buy 5 exotic cars. And then now he's speaking to us like, hey, what am I gonna do? And we want to do what's best for him, but it's just like that's what we're talking about, like the responsibility factor of certain things. Like you need to make sure that if you're utilizing these funds, right? If you have this type of money, that they are like going to make you some type of an ROI back where you can service your debts.
Cash flow assets.
You need to make sure you're buying assets, cash flow assets. Mitch does a great job with what he's doing when it comes to his real estate plans and what he has going on. Like we try to, even if we work with somebody and they don't know what they want to do, we're like, hey, speak to Mitch. You have $100,000 in 0% interest credit cards that you don't know what to do with. Let's buy some assets. Let's do something.
What's going on in the deal together?
Yeah.
Exactly.
Yep.
So like
Exactly.
we love working with Mitch. We have some trucking automation companies we work with, e-commerce automation companies we work with, but we just want to make sure if somebody's thinking about like getting involved in assets and stuff, things of that nature, we just want to make sure they have a plan for their money.
Yeah.
We don't want to put somebody in a position.
Absolutely. And like Mike was saying, sometimes partnering up, to go back on that, finding who you're partnering up with is the absolute pivotal thing. It's just as important as getting funds and getting access to funds, because had this person been in touch with Mitch or had known Mitch, he would have been in a much making passive income than going into total automation in a saturated market.
Right.
Because the specific market he went into is unfortunately saturated. In Florida, in South Florida, there's Lambos everywhere. Like I live in Miami, and I swear you think they're giving these things away like Honda Civics.
Right.
So I know I saw something in the chat about the 5x24
Yeah.
rule.
Yeah, I was just
So
gonna bring that
you're
up.
like you're talking about 5 revolving lines of credit within 24 months. So like Chase stops approving people after that point. So with it, well, yeah. So within actually Mace is a little bit more than me. So they so with Chase after 5 revolving lines of credit, and you try to go to them for another credit card approval within 24 months, you're gonna get denied. There are some instances when they don't do the correct review of the account, and that's like, let's say you had a loan and they reviewed that loan as an open line, a revolving line of credit on accident. You know, even though you get denied within that 5 to 24 rule, you can always call for reconsideration no matter what. You can see what the actual problem was on the denial. If you know what I'm saying. So like they may ask for identification, you may ask for them to review the credit profile again. You know, you can provide more documentation. But the 5 by 24 rule is fairly straightforward.
And this does extend to just in general funding. If you have a ton of inquiries, you can have a cash in bank. You can have an excellent credit score and a really strong credit profile, but you're going to get auto denied because the banks have a system where if you have too many inquiries, you're going to get an auto denial without them even actually looking at your application. That's also why it's important to have some really good credit people to come in and clean up your inquiries and help you guide you along the process. So anytime you do take a shot, it's like making sure you have a sniper rifle. You're taking a shot to kill and hitting your target rather than just spraying and not getting the most return on your applications.
We have a saying around here, aces in their places. And that refers to a much deeper strategy of investors aren't property managers. Investors aren't contractors. Investors aren't plumbers. They're not painters. Investors are investors. And there's a temptation, especially with the DIY movement. And I particularly see this in fixing and flipping, where people who want to be investors think that also means that you strap on a tool belt and you go do the whole fix and flip yourself. But that limits the scale because time is a currency that we are limited by. We can never get more of it, and if we spend it a certain way, it's gone, right? So having aces in their places, just to echo what you're talking about, Oscar, having a professional to help you through this process, having someone to coach you through what to do, I think is invaluable. And I know that's why I've sought out your services. It's because I'm not a credit expert. That's not what I study. I study real estate and the things that are going to help me expand my ability to invest in real estate at a larger scale. Credit is not necessarily one of those things that I put a lot of focus into acquiring knowledge about. So having experts, having aces, and putting them in their places to lead me through that process, I think is invaluable. So let's talk about. So we've gone through. We've got our personal credit, and we're focused on our personal credit to get that in line to a point. I think Oscar, you mentioned a 720 credit score. Is that correct?
Yep.
Yeah, like a 720 credit score. Now we've got our LLC set up along the way, as Michael suggested, and now it's time to start thinking about going out and getting some business credit. What's the process there? What's the process that you walk people through in order to go from having no business credit ever to now we've got $100,000 in lines?
Yeah. Realistically, like every case is different, brother. Like for instance, for an example's sake, like I had somebody come on board and they had a $3,000 credit card on their person, right? So what we did was for the next 3 months is I coached them on how to liquidate said card for $1,000 and utilize the same funds from liquidating the card to pay the card back. And that's just so we can show that he's using the card. On the third month, I asked for him to get an increase on his card just by doing the strategy every week, buying $1,000 gift card with your credit card and paying it off. There's a fee associated with it. I think it's like $5.95 for the gift card for activation, but then you have the card, right? Um, then you utilize that and pay back. So in 3 months, when you ask for an increase, they generally give you up to three times what that limit is. So like he got guaranteed a 9 grand card off the cusp, like after 3 months of just implementing that strategy. So, or we have other people that come to us, like I said, that's 71,000 on the personal. They already have like a good base of operations. They've had a mortgage. They have, good green flags for them to see, and they're like, okay, he has a mortgage, he pays off that. Okay, he has 5 credit cards already that equals 71,000. I see he utilizes one and pays it off every month. And those are the things that we need to know, like, so we can understand how they move into something like that.
Yep. And just as the 524 rule is important, the inquiry rule is also important overall. So while the strategy changes and is unique to every single person's vision, dream, and their relationships, the strategy is the same in that the first thing we do is we make sure we leverage their existing banking relationships.
Yep.
So if they've had an inquiry already with somebody, let's say they bank with Chase or they bank with Amex, that's going to be the first one we go to because we don't want to waste one of the bullets we have for one of these other applications. So we start building that relationship first. And what Mike is saying is a perfect example of having somebody that maybe doesn't have the cash on hand or the strong credit profile to start applying for other places and credit stack at 0% interest. But we can start working with what they already have and start increasing those limits as well.
Yep. So essentially, the start for all of this is you're going to start where you're already at, and that's like the banks you're with. So if you're with Bank of America, we're going to look at the products and services associated with Bank of America if they're worth you staying there. Vice versa with Chase, TD, Wells Fargo, credit unions, whatever it is. We need, even if, and this is another thing, I know people who get mortgages with other banks because the FICO score associated with that bank is, the requirement is less, right?
Yeah.
So that's a banking relationship, and we can explore that option because you already have a great relationship. They approved you for a mortgage.
I find that. Let me just commentary on that, and then let you guys continue. But isn't it interesting? I find a lot of new investors, a lot of new students of mine will go out trying to get lines of credit or get HELOCs to do the velocity banking strategy, and they go to one bank, and they get denied, and they're like, oh, I can't do it, I got denied, right? Different banks have different requirements. I mean, there's the law, there's banking law, right, that everybody has to follow, but then above banking law is the bank's own policies. Maeli and I recently increased our HELOC on our personal residence where we are right now, and that's something we went to two institutions, and we're one of those borrowers that doesn't fit into the box, right? Banks don't like us because we don't fit into we don't have W-2 income, kind of thing, and so we don't fit into that box. We got declined by our bank that we bank at, on a daily basis with our personal and our business. We got declined by another credit union that we went to, and it wasn't until the third bank that we went to in this round that was like, yeah, we'll approve you, absolutely, and they approved us for a HELOC increase 50% higher than what it was before, and they did it in 2 weeks. So just because one bank declines you doesn't mean that you're not lendable. It may just mean that you don't fit in that bank's box for what they approve for. Try other banks, right?
So, hold on.
I'd love to touch on that too. Working with local banks and local credit unions is going to be a major key to success when you do have an established profile like Mitch, because when you're asking for these funds and you're working with major banks like Chase, Bank of America, Amex, they're great for credit stacking strategies, but when it comes to lines of credit or getting a HELOC, you actually want to be a big fish in a little pond. You don't want to be a big fish in the whole wide ocean where there's sharks that have millions in their bank account and are going for the same type of loans that you are.
Yeah.
Exactly.
And to add on to that, so like how Mitch said he visited 3 different banks and like the first 2 didn't approve. So like let's understand that for a second. So for Experian, right? Experian, you're looking at your FICO score too, right? With Equifax, you're looking at your FICO score 5, and then with TransUnion, you're looking at your FICO score 4. So they all have different pulls for different lenders. So he could have gone in there, and let's say he went to Experian, just for numbers, I don't know his credit profile, but let's say he had a 700 for the FICO 2 for Experian, but their requirement is 702 for the FICO score 2. But then he goes to the other bank and he has another 700 in the Equifax position, but for the FICO score 5. Now they're like, okay, let's go. And it's just because of like the lenders and who they pull from, and that's where they feel comfortable. So it's all dependent on the bank and the person.
That's the importance of having somebody with expertise. You know, I'm not going to go get into real estate or buy real estate without consulting Mitch. That's also why it's important to talk to someone like Mike who loves studying this stuff, because he's going to give you advice on where you should apply based on your specific profile.
Yeah, everything is tailored. Everything has to be tailored. So like Mitch said, he doesn't fit in the generic box which most banks deal with. So like we need to explore his outer box.
Outside the box. So in that same vein, David Coker-Hans Jr. asks, is W-2 income critical to business credit approval?
So here's the thing. When it comes to zero doc applications, which we would focus on originally, and those are like the 0% credit card stacking strategies that we have, right? We would go based off of the information that you provided for your tax returns. So like whatever you reported on your taxes, we'll utilize that and then just do like a projection of the income that we perceive that you can make within that year. So like let's say for these numbers, you made 100,000 one year. I'm gonna say, well, this year you're projected to make 130,000, 30% increase of what it is that you were making last year. Also, you can also use household income. So like let's say you and your wife both make 200,000, and they're like, oh, what, on your W-2 it says 100,000. It's like, well, you guys said total household income. Like I have access to another $100,000 in income, and that's something else people don't understand. When it comes to debt to income now, and you're utilizing your spouse, that's a different. Like then now they see you have availability to give you that line. People get denied all the time just because they think it's their income. So like understanding certain things like that when applying is huge. So yeah, there's that.
Yeah, absolutely. Well, we have one more question from the group. So, and this is more of a comment, but maybe you guys can touch on it. Alex says buying trade lines helps to get a higher score temporarily. What are your thoughts on that?
So let's talk about trade lines as a whole, right? So what is a trade line? That's you're piggybacking off of someone else's good credit history. I think back before 2008, those things were the wave because they affected your credit like they affected the primary owner of that account. There's been a lot of negative connotation around that, and Experian actually took it out of their algorithm to even give you a score based off of that as well. So if you're trying to utilize trade lines to purchase property or increase your credit score for the time being, I would say save your money and spend it on something like a primary trade line stacking strategy where you can just increase your credit. There's a whole bunch of things out there that are more permanent and more geared towards you as a primary person, towards your credit profile, than utilizing an authorized user or purchasing an authorized user. Does that make sense, Mitch?
Yeah, absolutely.
Like you would prefer having a primary than authorized user any day.
Okay.
So
It's also permanent. It's not temporary. So yeah, you might see a 50-point boost with the trade line, but that's not permanent.
Yeah, it's not going to help you in the long scheme of things. And I've spoken to many underwriters, and they're like, and I'm like, so how do you guys feel about authorized users? They're like, well, I mean, we can't calculate that in because if that's the whole integrity of the application, you don't actually have access to that money. That's not your money. So that's how they're looking at it. Yeah, credit history. Yeah, utilization. It's only going to reflect on the Vantage score on the Equifax and TransUnion, not your Experian. So it's just things to think about.
Which I think brings up a really important point. I mean, you mentioned that Experian recently stopped counting trade lines as part of the score. This is an evolving process. I mean, these companies that track our credit, it's not something that we can have a book from 20 years ago or cassette tapes, from the 80s, and it's going to be applicable today. Like this is something that changes. And just like the real estate market and real estate law and tax law and all of these things that go into being a real estate investor change on a regular basis. And this is why we have a call weekly, right? Because the market can change in a week. Things can happen, and we need to have conversations about this and be educated around it, and have a think tank around it, and have coaches around it. This is, I think, another reason why it's important to have an expert that can help us navigate and understand the current policies. Because if we're operating off of a YouTube video that we watched that was published in 2015, it's probably not going to help us very much, right? Yeah, it's not helping anyone. So this is something that's evolving. It's something that's a process.
I was gonna say, to add on to what you're saying, things that are all constantly evolving. They're coming out with a new FICO score, the FICO 10 score, and you're like, wow, another FICO score. But this FICO score is actually a benefit for the people who don't have like that credit history. So what they're doing is taking your banking history now, like your cash on hand monies, your daily balance in your bank account, and they're factoring that into your FICO 10 score. So like we're saying, if we're going to leverage the bank you're currently with, and you have a great relationship, your internal banking number is off the charts with them, your FICO 10 score is going to be juiced by that, which in turn will juice up your FICO score, and you'll get better lending through the current banks you have. So like that's a benefit for those people who don't, you know, have the best credit history.
Yep. And think about foreign investors or anybody that's cash rich. This is going to be great for you to start leveraging
Placing
credit.
that in the bank,
Yep.
having it in the bank, making sure you have that money in there. Having money in this industry and being able to place it and move it around and leverage it and move it around, and like hold on to your money as long as you can.
Yeah,
If that makes sense.
absolutely. So I know we got off a little bit on a tangent here, but looks like we have another question or a comment. Kathy says, I just did this with my daughter, and her credit scores, all three went up an average of 150 points. We pulled directly from each bureau. Yeah. So, I mean, it's working, right? The process is working. Now, I know we got off on a tangent with some of these questions. Is there more to the process that you guys were kind of digging into before that you want to share with what it is to go get business lines of credit?
Yeah, like I was said, start with your personal credit. Make sure that the integrity of your credit profile is up. Making sure it's above a 720. That's normally like the minimums for any premium card out there, and that's where you want to sit. Those are where the 0% offers are. You want to make sure that your LLC is 100% from start to finish. So that's like making sure all the addresses, making sure your EIN matches your articles of formation, making sure you get a Duns and Bradstreet number set up. You know, and also if you guys ever do need help with that, you can ask us. We know the process.
Absolutely. It's a revolving process, like Mitch said. So you're always going to be looking at funding, and you should either work with a credit repair company or learn how to remove inquiries yourself. Obviously, you don't want to remove an inquiry where you have an open line of credit, but oftentimes you have a lot of denials, and getting those denials removed and those inquiries removed off of your profile just gives you another bullet to shoot again. I don't know why I keep going back to this, but it's the easiest analogy I can give. But yeah, basically, you want to make sure you're able to continue to apply, and you're not racking up so many inquiries to where you're going to be an auto denial.
Yep.
Yeah.
So I did see something about the Duns. Mitch, do you want me to answer that? Or?
Yes. Yeah, please.
Okay. So like there was a strategy prior to for the Duns and Bradstreet, and that would be to open up net 30s like Will and Granger and all those net 30 accounts, and because what those do is we pretty much make an order for $30, and then you pay off that order and you report that payment to Duns and Bradstreet, right? And that would be to build one specific bureau, and that would be your Duns and Bradstreet PX score, right? So as Small Business Financial Exchange goes to the Equifax, and they share information with the Dun& and Bradstreet. So like we put you with cards that directly report to the important credit bureaus, right? So if you have a Dun& and Brad, if you don't have a Dun& and Bradstreet, now the information that you're doing, so that's like making your payments, you have your limit, all that. Your paydex score is not going to be growing if you don't apply for the DUNS. So like we found greater effects on the paydex score when we do it in this fashion, where we utilize the cards that will benefit you the most, like through your experience, your financial small business financial exchange and your Dun& and Bradstreet.
So what is? I'm going to dumb this down even further, just for the sake of any potential listeners that don't know what you're talking about. What is a Dun& and Bradstreet number?
So a Dun& and Bradstreet number is just before Dun& and Bradstreet used to be utilized so you can purchase government contracts. You would get this number to show that you can handle certain government contracts. You would bid for the government contracts with the Dun& and Bradstreet, right? But then what they did is they actually split it, and now they don't do that anymore. It's like so, I think it's something.gov now, sev.gov, something like that, where you get a like a unique identification number through them now to do the bidding for those things, and try to get access to certain government grants as well. So that's what Dun& and Bradstreet is used for now. Now it's just simply a service that they collect information based off of your business. So that'll be like the owners, the location, the reporting accounts, depending if which information is going to it. So it's just like it's essentially another credit bureau for the business.
So like Experian, Equifax, TransUnion, those are our personal bureaus that report on our personal credit. Dun& and Bradstreet just is another bureau, but focuses specifically on business credit.
Yep. So that'll be your Dun& and Bradstreet. That'll be your Small Business Financial Exchange. That'll be your Paydex. Like all of those are the ones that are collecting those information to help building like your business credit profile. So
Okay.
we all need to report to something.
Right. Right. Well, and creditors need to have a way to be able to see if we are credit worthy, right? Because there's a lot of people out there who are not credit worthy, and are a risk and shouldn't be getting borrowed money. But as responsible individuals, I mean, I think everybody who is taking the time out of their lives to be on this call and is responsible enough to educate themselves in real estate investing is probably responsible enough to manage a credit card, right? And that's going to reflect on your Dun& and Bradstreet number, but your Dun's number is not going to show your personal credit. It's where personal credit does factor in. It's going to show your LLC, for example. So I'm not going to have a Mitch Nelson Dun& and Bradstreet number, but I am going to have a Mitch Maeli LLC Dun& and Bradstreet number that is going to allow me to get future business credit. And that's something that I want to focus on now as I'm building my business credit.
Yep, 100%.
Very cool. And then, of course, once we have business credit, we're going out and we're buying assets, right? And I think that's important. Do you guys have any other? I kind of I enjoyed the story that you shared about somebody got $250,000 and went out and bought some exotic cars with it. Don't buy liabilities. Like, we want to be buying assets. And by the way, I need to shout out to one of our students that's on the call today. I know he hates being in the spotlight, but Ken, I think, does a great job of this. I mean, I've seen this kid get close to $1 million in credit and is out doing the right things with it. I mean, he owns shares of trucking companies, and he's doing dropship companies, and he's investing in real estate. And what a great example to follow of someone who's putting it in the right place. Don't go buy exotic cars. But the question is, do you have any other examples of people who have done this wrong? Maybe cautionary tales.
I'm gonna be honest. A lot of the people we work with now, we speak to them a little bit more like intimately when it comes to like the use of these funds, because like we don't want to produce a failure and then think, well, you put me in this position. So like,
which isn't fair, but people do think that.
Yeah,
Yeah.
we've
Yeah.
gotten better at coaching, but it was a learning experience for us too.
Yeah.
So, unfortunately, we don't have any other, red flags. But that's also as our network grows and we partner up and we have better people to partner with. We make sure that if somebody does have a ton of cash laying around, we're making sure they're putting it in deals where they're partnering with the right people.
Yeah.
So we literally just drill the importance of consulting with us before they do anything. Some of the stuff that happens now is a little bit more minor. Sometimes we are working with partners and we want to wait for them to apply so we can actually get them this specific strategy that's going to get them a little bit more of a return. And then they get excited. They get an offer in the mail and like they've always wanted the Amex. So they're just like, oh, I got the Amex Platinum now that I got my good credit. Let me so we still have stuff like that, but
Yeah.
luckily not like
That was
somebody
great.
spending 200 grand on exotics. Yeah.
It was great, Mitch. Like Oscar said, we did have clients call us the other day, and they're like, "Man, I just secured 15 inquiries, Mike. Can you get them removed?" I'm like, "What do
Yeah,
you
we
mean?
can.
Like you're supposed to go into funding next month. What are you talking about?"
Yeah, yeah.
I'm like, "Oh my gosh."
Yeah. Console your professionals, right? Like
Yeah.
communicate.
Excitement is great, but like everybody control your excitement. Like you can always get access to more.
You know, I mean, talking to you guys just reminds me of something that I was taught by one of my early mentors, and that is, if you think it's expensive hiring a professional, try hiring an amateur. And this is true in any part of real estate investing, and I think any activity, money making activity um, that requires you to play at a higher level. We talked about earlier how an investor is an investor, not a contractor, not a property manager, etc. And not a business credit expert, right? Investors aren't business credit experts. We're investors. We know real estate, and that's we know how to analyze them. We know when to buy them. We know when to buy them, and that's basically what we're good at. Everything else we should be hiring out. And it's frustrating when I see people who haven't quite hit that wealthy mindset yet that don't want to spend the money on hiring the experts to help them do the things that are actually going to make them grow. That don't want to spend the money on getting educated to go out and do these things correctly, because what that money actually represents is a mitigation of risk, right? It's incredibly risky to go out and start investing in real estate if you are not educated. It just is. And if you're not willing to put forth a little bit of capital to educate yourself and to mitigate some of that risk, then you're going to pay for it in other ways. And that's true of business credit as well. If you're not willing to put forth a little bit of capital to go out and get this done right and mitigate the risk by using an expert, then you're going to hurt yourself and you're going to end up paying for it in other ways. Back to, if you think it's expensive to hire a professional, try hiring an amateur. Guys, we are amateurs at most things. Even if you're an expert at real estate investing, that doesn't mean you're an expert at legal or tax or credit or construction or any of those things. And you don't need to be an expert. You just need to recognize that we have to put aces in their places. We have to be willing to expend some capital. I mean, how eager are we to go get that cup of coffee in the morning? How eager are we to spend $14 a month on Netflix and on Hulu and on Disney Plus? How eager are we to go spend the money on a vacation, 3, 4, 10 grand on a vacation, when we could be spending a couple $1,000 to secure capital for ourselves to be able to go out and grow our business, to secure knowledge for ourselves to be able to go out and safely acquire assets. It's just a mindset shift. So in that light, I would love for you guys to kind of share how those on the call, including myself, can tap into the wealth of knowledge that you guys are, and start utilizing some of your services to go out and get business credit.
Yeah.
Yeah, absolutely. I will put our emails and our phone numbers in the chat. Feel free to reach out to us. We're as young entrepreneurs, we're available for clients 24/7. That doesn't mean calling me at 3 a.m. and telling me you're thinking about applying for something. That means if you are want to pick my brain, want to pick Mike's brain, and have a vision and a out to us, um, or reach out to Mitch and put us in touch because we would love to help you guys.
Yeah.
If there's one advice I can always give to anybody, make sure your personal credit's on point. Instead of, like Mitch was saying, time is money. So even worse is not hiring somebody. That's gonna hurt you even more, set you back even more. So instead of putting $1,000 towards getting the new iPhone, like most of us all do every single year, put $1,000 towards your personal credit. It's not where it needs to be.
Yeah.
That's something I always say and always tell everybody.
100%. And then not only that, um, any service you guys come on board with, we're going to be there to coach 100% of the time. We're going to make sure that you're doing the right things, making sure you're not applying for stuff. You know, we have goals, guys, and what it is at the end of the day, what Mitch is saying, like, we to achieve goals, you need strategy, you need, and then to execute on the strategy that is agreed upon amongst all parties. We all have our own, we all have our responsibilities in these agreements. So,
Yep, absolutely. Yeah, Oscar, if you can drop your contact information in the chat right now, we're going to open it up to some question and answer. But that gives everyone a little bit of time to copy and paste and be able to save your information. So, guys, the time is yours. I'm going to jump off the spotlight here, and I'm going to let these guys answer any questions that anybody on the call has. So feel free to come off mute. I know we've been doing a little bit of chat questions, but anything related to business funding, anything related to lines of credit, we've got a couple of veteran experts on the call right now. Now's your chance. Let's knock it out. Let's ask our questions. The time is yours.
So when you were talking about the lines of credit at 0% interest for however many months, which is typical for some of the credit cards that you can access, what about the guidance for the interest rates that we're paying right now, like which are pretty steep, and what are you finding for as far as what the interest rates look like for business lines of credit in the market right now?
so it all depends on like where you're at, right? So we're talking about you can get 0% interest balance transfer cards, right? You can get 0% interest balance transfer cards that you can utilize for some of the higher limits that you're carrying. That you said the interest. What kind of business line of credit are you looking at currently?
Well, I do this is how I function anyway, but like right now, because things aren't selling as fast, I'm having to pay debt service on a lot of the things that I'm using to invest with. And so you have to be careful with the money that you do invest because it's not guaranteed. Like your return isn't guaranteed and what you think might happen. There's a million things that can happen. So you have to be careful with, how thin you allow yourself to go. And like right now, because I'm trying to pay down some of the things that I leverage to invest with because things haven't sold. So I'm trying to pay some of those down, and I'm also trying to use 0% cards. The problem with some of the 0% cards, of course, you have to pay the 3% up front on any kind of transfers. There's a credit union here that I work with that now has they don't charge for transfers and they have a 1.99%. Um, so some of those monthly bills that I'm having to pay without the money back that I've invested, some of those can go on 0% cards. I have very good credit. I have lots of credit cards. I'm just trying to juggle those types of things. But what I'm curious about is a strict business line of credit. Like what rates are you seeing after the initial? I mean, I know the difference between like the business line of credit and a credit card. And so the credit card rates are steep for most after that initial 20 months or 15 months or whatever you can get.
Yeah.
But what about the business line of credit? What kind of rates are they at?
So typically, what we've been seeing is anywhere from 3 to 11%. We haven't seen anything below 3%, so they're usually around what the Fed is, and a little bit lower. For a specific situation like right now, being in a recession and making sure you have more runway, we actually recommend credit stacking and keep continuing to do balance transfers because the 3% better than the 7 to 11% when we were talking about, 10 figures, 6 figures. Um, but I'll leave it to Mike as far as like explaining why that is. And
Yeah, I mean,
yeah,
if you have cards that you're paying interest on, you potentially want to start looking at what options you do have on a 0% interest, like credit stacking strategy. So like, let's say you're paying 20% interest here, you're paying 17% interest there, whatever the case may be. If you look at what you have available right now, you may even have to like start building better banking relationships if you feel that you're being restricted on your availability, because then you can start using, like, let's for instance, like we're using Chase for instance. Chase has 2 0% interest credit cards that you could probably mitigate some of those interests onto them. Start utilizing those cards. You can utilize U.S. Bank. I think they have a 21-month card. The good thing is about a lot of these cards is they let you also combine balances and reapply 6 months later. So like, let's say you had two cards with Chase for 20,000, 0% interest. You can actually combine that 20,000 and that 20,000 in one card to start over that 0% interest line. So like they start over the offer, like essentially with that credit line, and then 6 months later, the card that you combine with that card, you can do another application for the existing card that you don't have anymore, and they can match limits. But that's how you can kind of continue getting 0% interest as you
and
try to grow.
I love that you touched on credit unions too, because there's a whole list. I mean, and we also have our internal list where we continue to grow of banks and credit unions that have special offers on balance transfers and 0% APR introductory. So like it really, the benefit of like working with someone like us is we'll look at which relationships you've already used and which ones we know you'll qualify for, and we'll coach you on like, hey, exactly. These are banks you're going to be able to qualify for and apply. So let's, now that those 12 months are coming up and you don't want to have that, because we all know after 12 months it jumps to like something ridiculous like 20%. So then you transfer that over to the new one. So there really is like an endless list of cards and credit unions that have those special introductory offers, those special balance transfer rates. So it's just doing your research. This is what I love about Mike. He'll be up till 2 a.m. to do that.
And also, just to touch on it, it's hard to say sometimes because, like Oscar said, like it really is all dependent on the person. Business lines of credit, loans, they have a little bit more of an intricate of application process that they need to see certain documents, certain minimums, and all that kind of stuff for them to be comfortable with issuing certain lines of credit as well. So like, the safest way to get 0% interest credit is to get 0% interest credit cards and utilize that to the maximum. Like, we have a client, they own a solar company, and they have a $250,000 business credit card with Chase. So it's just like, these lines can get to the position where you feel like a business line of credit. You get what I'm saying?
Yeah, so like business lines of credit are great, but there's actually even better options there.
And what is your LLC structure? Like, how do you market your business?
So we have different packages for different levels. For somebody that is already fundable, they have their business, we don't have to do a ton of legwork. We actually just do a fee structure on the back end of 5 to 10% of the monies raised. For somebody that's new and wants to start a business from scratch, we have different packages at 4,000, 5,500, and 8,500 on the upfront, and that's because we're going to be utilizing those funds towards building their business, towards putting them in programs and applications that are going to be able to make them more fundable.
Yeah, and cover most of the like fees associated with some of the strategies that we implement as well.
Perfect. Did that answer your question, Charlotte?
It did, yes. Thank you. And I know these are great ideas, and it's things that I'm learning as I go out of necessity. But
Yeah.
it is something that one of the interesting things that I found is that at least they told me, I haven't actually gone through this, I don't know if it's going to play out, but she did say that I could transfer from my HELOC, because my HELOC, most HELOCs, I don't know if yours is, but mine is based on the federal rate, so it continues to go up. And so they said that I could transfer from my HELOC to the card, which they have a no transfer fee right now and 1.99% for 12 months. So it's not a 0%, but it's no transfer fee, so it actually is better.
Exactly. Doing something like that is extremely smart. Trying to get utilizing these 0% interest cards, like if you have a HELOC, like she said, utilizing the HELOC, and then converting it over into your 0% interest cards, taking advantage of that 0% interest.
Yep. Absolutely. So just a quick reminder for those of you who are joining us on YouTube, you can type your questions into the chat if you have any questions. Feel free to participate in that way. We did get a Zoom chat here. Oscar, what is the name of your company and do you have a website? Oh, I noticed that you just responded to that. Yes, we are currently rebranding. You can find us at www.e-comgurus.com.
Yep.
Perfect. Okay. I'm going to expand that for those on YouTube. I'm going to expand that chat box a little bit so they can continue to see your information here. Okay, any other questions, guys? Now's the time. We've got a few minutes. We got a hard cutoff in about 14 minutes. So if you guys have any questions, now's the time to come out and ask them. Feel free to come off mute.
Also, I'm just gonna go ahead and say that at the time Mike is a single. You guys were wondering,
I love it.
Taken, I guess.
That's awesome.
Yeah, anybody has questions, I know, like, sometimes talking in a public setting is a little bit intimidating. Like we have our information there, guys. If you want to put our phone numbers in there.
I have mine here.
Yeah.
Give me yours.
561-350. 350-0069. Yeah, if you guys want to give us a call and ask us questions, we're, like Oscar said, our doors always open unless we're sleeping. I get up at 7 o'clock and I'm going until about like 1. So there's my schedule, guys. If I don't pick up the phone call, I'm always reachable by text.
Same. I prefer text. I'm usually reading, so just text me if you have any questions, and I'll get back to you.
So it looks like we got questions from Denise and from Quinn. Let's go Denise first and then Quinn. Go ahead, Denise.
So I'm just brand new. I'm just doing all I can to learn things. I don't know what I don't know. But I have contacted my credit union just to see what I would qualify for as far as a loan goes, just using my own home equity.
Yeah.
And then I'm also hearing that for a lot of loans I would have to put 20% down. Is that pretty typical if you're not doing seller financing? And would you use a credit card, a 0% interest credit card to come up with that down payment? Or would I want to look at something else?
So I can answer part of that question. Let me tackle the real estate side of that first. So as far as purchasing a new property, if you were just to go use a mortgage and you wanted to acquire a new property, yes, most likely if this is a new acquisition on an investment property and you're transparent about all those things, yes, absolutely they're going to require a down payment. However, there are ways around that, and we teach a lot of these strategies. Seller financing is one of them. Where that's a great way to be able to use some of these lines of credit these guys can give you to be able to because there's still a down payment. It goes towards different things. Like, for example, if we're catching someone up on their mortgage that's about to be foreclosed on, we have to get that mortgage current, and if that's 20 grand, we got to come up with 20 grand. 0% card is a great way to do that. Rather than getting a traditional mortgage for an acquisition of something like a rental, I like to use hard money to go purchase the rental and then do whatever I need to do to it. If that's just paint, or if it's just carpet, or if I just need to go in and clean the place, I do that, and then I go and do a rate and term refinance, which usually doesn't require that down payment. A rate and term, they'll just knock out that hard money, and you're good to go. Now, I'm gonna turn it over to you guys to answer the other part of that question, which has to do with the acquisition of business credit.
I'm so happy you said that, Mitch, because I knew you were going to give some gems. So yes, you're going to want to build your business credit, and the reason you're going to want to do this is because if you're in the game of real estate and reinvesting your monies, you're actually going to want to build your business credit over getting a new mortgage. And the reason I'm saying this is because if you build your business credit and you're getting lines of credit or you're getting credit stacking that you can put down for down payments, like Mitch was saying, you can use creative financing to make more plays and keep your money to make these payments rather than getting in a long-term mortgage where you're going to be paying interest over the principal. So it's actually better to have a card where you have interest on it that you're paying immediately because you're paying both the interest and the principal payment than having a long-term loan that you're only paying the interest and none of the principal on. And sorry, just remind me what the last part of the question was for the credit fund.
Sorry, that was such a loaded question. I don't hear.
we,
No
we
worries.
might have answered all of it.
It's okay.
Yeah, we're here to help. And what Mitch gave you is incredible advice. There's a lot of people that want to get into real estate and they're doing it wrong. Um, the advice Mitch gave you is going to allow you to run instead of crawl.
So just to add on to that, having access to these 0% interest credit cards is good to have for fast injection of capital if that's what you're trying to look for. So yes, like having access to 50,000, 100,000 on these cards, and you need to oh, I need to go drop 20,000 on this. There it is on the business side. So yes, it's sometimes in your best interest to just build these types of runways so that you can have availability for the man. This looks like a great deal. All the numbers match up, and now you don't want to be at that point when you're looking for funding versus having access to the funding and just saying the numbers match up. Okay, I'm gonna make this. I'm gonna do this.
Yep, treat credit like cash. You want to have 100K in deployable credit that you're not using because it doesn't go away.
Yeah.
Um,
You just don't want it to become dormant. So those are like 6 month windows. But
Yeah.
yeah.
I was actually talking to somebody yesterday. Oh, sorry, Mike. I didn't mean to cut you off.
No, you're good. You're good.
I was
Am
talking.
I am I hearing correctly that we're talking about two different things? One is a business credit card, and
Mm-hmm.
one is a business line of credit.
They're
Am I hearing
they're
that
kind of
right?
so a business line of credit is so they give you it's like a credit card within a bank account that you can use as deployable cash, and that deployable cash every single time you take from it is considered like its own individual loan. So like let's say you had $100,000 business line of credit, you don't pay any interest on the monies you're not using. So like if you take out 20,000, the interest on that loan will be whatever was issued or whatever the rate is at that current moment on that $20,000 loan, and then you have another 80,000 sitting there. Does that make sense? So it's just like it's an account within the bank that they or the establishment that they issue to you for deployable cash.
Earlier, did I hear you say not to? Can you see what I wrote down? Not to use. Oh, you
So
said there are better options than a business line of credit.
yeah,
yep. For that specific situation, um, they have the ability to go from 0% to 0%, so they don't need it. There's times where you are going to want to use a line of credit but for that specific situation, over using a line of credit, having several credit cards you're transferring from into is going to be a better strategy.
yeah. You're
Okay.
better off paying 0% interest than 8% on interest on something. So that's like would be the difference. And business lines of credit normally are never fixed rates. So that's another thing you got to think about. So you'll have a variable interest rate. So like one day it could be 6.5, and then the next, just like in retrospect, like you're not gonna have a fixed interest rate on those lines.
And can anyone just walk in and I mean I have good credit, but can anyone just walk in and get a credit card for 0% interest?
Yep.
In some cases, and if you follow our guidelines, you don't even have to go to the bank to
Yeah, we can all be at the luxury of your home.
Yep, exactly. Or we could set you up with one of our relationship bankers. That will help you through the application as well. So yeah, in a lot of cases, you don't even have to go.
Yeah. So, but like you said, yes, you can walk into any bank or you can do it online, any application, 100% do it yourself.
Okay, thank you.
You're welcome.
So Quinn, my man, you're up next.
All right, so I ended up buying I kind of took all my knowledge and I took a kind of an interesting spin about 2 years ago, and I ended up seller financing and purchasing a classic art restoration business,
Cool.
um, and uh, basically have grown it. I doubled the business, a 25-year business, my first year,
Let's go.
And boy.
with the knowledge that I've gained. But ultimately, what I'm trying to do is grow again, my business credit, a lot of my lines of credit to be able to utilize the idea that, currently right now it's really pretty customer based. I need customers to come in, you know, but ultimately to grow my lines of credit enough to where I can purchase these classic car kits, basically, is what I'm trying to do, and just be able to put my business on autopilot, have my right employees in place, and they just do the work, and then I don't have to worry about the customer aspect of it. I basically turn this business into a manufacturer of these classic cars. And so ultimately, what I'm looking to do is to go, how do I get capital, or not capital, uh, credit enough to be able to do that?
Yeah.
How much are you looking for?
Probably 200,000.
Perfect. Yeah, we have strategies to get you to that point. Realistically, like we were saying, starts with your personal credit. We would have to see what your cash flow strategy is, and that's like how you're handling monies coming in and what you're doing with said monies. Like if you have one business bank account, I would suggest getting more than one and then just moving money around. That's just to build your banking relationship with those banks.
Okay.
We would want to make sure that you're like not doing any inquiries for the next 3 to 6 months.
Yep.
We got to make sure that all the card inquiries on your personal credit report actually associated with an open line or an open account. Um, yeah, if you have liquidity, like if you have access, guys, if you have access to 20, 30, 40, $50,000, like because you want to invest into something, I can show you where to put that money and you guys can get higher limits on credit cards as well. Like it's just all about knowing where to place funds, how to move the same money around, like those type of implementations that are going to help, you know, increase your credit lines.
Yeah, Quinn, question. What's your Friday looking like? Let's set up a one-on-one consult so we can actually like go into detail, see where you're at with your credit and everything, and we can implement a strategy to get you there.
Yeah.
Okay. And then how long typically? I mean, 6 months or so is kind of the pace I might be looking at, just as far as being able to get there.
Yeah.
More like we could get something like that done in 3 months, depending on where you are. Is what really we will. It's like asking a mechanic what's wrong with their car. If you hear a scratching or a squeaking noise, we won't know until like we open up the hood, run the diagnostics, have that one-on-one consult with you. That's when we'll really be able to give you a timeline. So
Yeah.
roughly, without knowing anything, like I'd say 3 to 6 months.
Yeah.
Okay. Awesome. That's helpful. Thank you.
Yeah.
Okay. Guys, thanks so much for coming on. This was such incredible, valuable information, and I learned a ton. I'm sure everybody on the call learned a ton. So, thank you for being here. I really
Yeah,
appreciate it. And
absolutely.
these guys know their
We
stuff.
appreciate it.
In fact,
What's
we are all starting a private equity fund together. So, um, these guys are the experts, and we're going to go out and tear up some real estate together long term. So, it's a good partnership. Highly recommend these guys. Guys, thank you for being here. Thank
Yeah,
you for the
thanks,
value
thanks for
provided
having
today.
me. Mitch, we appreciate being here more than you think, brother. We love educating people. We love people who have questions. You know, like we talk every day, Mitch, and you know we speak to a lot of the clients that are in the partners that we work with every day, and we're constantly trying to just throw new information, new strategies, and we love the type of energy you give back to us, and that's a big driving factor in why we do what we do. Like we just like to see people succeed.
Agreed. Agreed. It's about changing lives, right? Love the people, use the
Absolutely.
money. I love it. Guys, thank you so much. For everybody on the call, for everybody on YouTube, thank you for being here today. We are here every single Wednesday at 7 p.m. Just a quick review of our announcements. We are streaming live on YouTube now. So where's Kathy at? Kathy, are you still here? If you are, come off of mute. Because this one's for you, sweetheart. This one, I've been promising you for months that we are going to make it available on YouTube. Now our Wednesday calls are immediately available. They're available live on YouTube, and they're immediately available after the call for you to go back and review on our YouTube channel, Flippin' with Mitch and Maeli. So make sure you check that out. Subscribe, ring the bell. It's going to notify you if you guys have missed anything. Real quick, just a couple of announcements for those of you anywhere in the United States. We have real estate investor community meetings all around the country. So if that's something you want to start participating in, if you want to go out and network, reach out to me. Text me. I can definitely get you in touch with the leaders of these communities around the country. It's something that you're going to want to be a part of. For those of you who are here with me in the Utah area, we have meetings twice on Tuesdays, once at 1 p.m., once at 7 p.m., different topics each time. Those are in Sandy and Murray. And then we have a Thursday meeting in Sandy, Utah at 7 p.m. on every Thursday. We've got Mark Kohler coming into town. He's coming up to Idaho Falls on February 17th and 18th. So if that's something you're interested in and you want to start plugging in and upping your tax and legal game, Mark's going to be here the 17th and 18th. Next week, guys, we are playing Deal and No Deal. You're not going to want to miss that. And then the following week, we have Carrie Mann coming in talking about understanding mortgages. So you're going to want to be there for that one on the 8th. Guys, this has been a fantastic call. Thank you so much for being here. I love you all. Stay healthy, stay happy, and get out there and do some real estate. We will see you all next week. Thanks, guys. Bye-bye.